What's up, YouTube? It's Todd Horst here with Taste Tracker, and today I have another Apple Wheel Challenge update. First, I wanted to say that the account is down about $3,000 at the moment. Here's my agenda for tonight. I'm going to talk about that $3,000. Then I'm going to talk about the margin calls I've gotten recently. Then I'm going to talk about my general market outlook and then my portfolio review. So the almost $3,000, first of all, that's unrealized. That is compared to what I've deposited. So if I go over here to Taste Tracker and come to the home page, then I can see that I've deposited about 28,000 or 29,000, and I'm currently trading at 25.7, which then equates to almost down $3,000. Obviously, I'd prefer that to not be the case. However, I'm not too worried about that, and I'll get into that in a minute. So next is margin calls. Most of the transactions you'll see coming up here is me rolling out and down. And that's all for the purpose of reducing the risk of assignment by keeping the strikes more relevant. So if we take a look at my Roku position, I started off pretty high strikes, 367.5, and I've rolled it the whole way down and out 335. So I've traded time for additional premium collected in most instances and overall, and better strikes. So I'm delaying the inevitable and hoping to work my way down. This is something that you can't do with spreads. So it's something with the choppy market recently that has really been beneficial. So you can see in two instances here, I took a debit, but in all other cases, I took a credit. And originally I had opened it for 1,400. Right now it's sitting at 22. So yeah, you can compare that. Adding, another, we'll say $700 to a premium while still going this many strikes down is pretty crazy. And again, something you can't do with spreads. So because I'm less and less in the money, if I right now it's trading at 324. If I was still up at the 367 or whatever, that would be much further in the money than what I am currently. If I'm staying around at the money as best I can, then there's much less odds that somebody will that I'll get assigned the shares. Okay. The other thing is by rolling it out, there's more time, there's more extrinsic value. And again, people aren't going to typically exercise their calls or their puts that they bought. And I'm not going to get my shares because there's so much extrinsic value left in it. The other thing that it really does, and this has to do with margin calls, is it reduces the collateral needed. Because think about it. If I was down here at 367, the collateral needed for that is, well, because it's a margin count, it's a lot less, but you can think of it as 367 times 100. And then now I'm the whole way down at 335 times 100. So I'm saving myself a lot of potential collateral needed. So that's the other thing I've done. Okay, so I'm going to go to this slide real quick. We can see here since the 10th, which is the last time I did the update, I've gotten margin called 5 times here. And you can see the amounts that I've been called for. And, obviously this one and this one weren't too bad, but the rest of them were over 1,000. That's pretty scary, especially if you're new to this. But down here, I have the link. And I have what is contained on that page. You have basically 2 days, 2 full days. So you get a margin call, say on Wednesday. You would have till close of business on Friday to get your account back up to having a positive buying power. And the way these have all worked is we had a significant down day, and then the next day we had a green day. Which, many of you are familiar with that happening. And so I would get to all of these. I was able to deposit just $500 or less to bring the account up to positive. So let's go over to the account balance page. We can see here I deposited 500, 500, 500. And yeah, that's it. So 3 times. And so 2 of those times, unless I forgot to log it here, which is possible. I'll double check that on my spreadsheet after I record this. But yeah, according to this, 2 times I didn't even have to deposit anything. So I think there might have been a 4th deposit here. Anyway. Okay, so I wanted to point out here that although this is scary, you do have 2 days to get it up to par, and I haven't had them, like, they do warn you that their risk analysis team could close out positions for you. I haven't had anything come to be that severe. So what I've done is when I get these, I'll roll out and down to free up some buying power, and then I'll deposit 500 and it'll be a bounce. And between those 3 things, it's gotten me good so far. Okay. So I think that covers it for there. General market outlook. Spy here, obviously, you know, earlier this week and last week, what has been kind of rough. We did have a nice bounce up here. I think this is close enough to the 20-day. I'm still bullish at this point. MACD and RSI, you can see my green line here, where RSI broke that trend today, and MACD is also curling up. So overall, I'm still bullish at this point. I don't think we have anything to concern about, although we might see some sideways chop in here before we get a leg up. I'm expecting things to get better as we move into the fall here, into the holiday season. Tends to be a good run, at least for me. And yeah, so generally speaking, I'm pretty bullish at the moment. I've been posting a bunch of plays today on Twitter. I'll do that again tomorrow, hopefully. But I think there's a lot of bullish setups out there. Okay, so I'll cover some more stocks in my portfolio review. I'll go over my positions. So let's first do the transactions. And we're going back to the 10th. So this was my second, I think, when I had 2 Rokus, or maybe that was the one that was day trading, and I was able to get in and out for $5. Yeah, that's what it was. That was a day trade. So this is me rolling out and down Lily, opening Apple, which happened to be a mistake. That was right at the top. So there's me rolling Apple. Here's me rolling all of my positions. CHWY was earnings play that went bad. Rolling again, and today I opened up another position, double down on CHWY, and I rolled out Lily. Eli Lilly. Okay, so let's go to positions. Let's first go to balance. Okay, so we can see here I hit a top of 31, and then I come the whole way down here to 23.6, 23.7, yeah, as a low. So that's a pretty wild swing if you're not used to it. You know, almost a $10,000 swing. But again, I don't think, and I probably missed some entries in here that were, you know, I skipped a couple days here that were probably lower than that. You know, and that's just the name of the game, especially with what we're doing here. Okay. Options. I have Apple expiring and Eli Lilly, but that's not till 43 days. This Lily that I rolled today, actually, it was on this expiration. I rolled it up and in, which is not something I typically do, but I was able to get a credit for that, and it LLY is looking pretty good. So I thought it was worth doing. So we'll do that one first. So I need to get to 240, and then the next one is 245. We're at 233 here at the moment. RSI and MACD look good to me. I do think it found a support down here around 218, 220. And so, yeah, so that's calls for me. At this moment, we're sitting above the 20-day, and this green line is holding pretty good. So that was enough for me to roll in. Roku has also been on a tear recently. Past 2 days, especially yesterday. So today I kind of see, again, as confirmation of the 20-day, but we should chop around in here for a little bit. I only need to get it to 335. That's the yellow line. And then we can come up here and encounter the 50-day Apple. Okay, Apple's looking good. Bounce off the 100-day. It's probably going to chop in here before it goes up. Again, RSI MACD looking great. So when I entered, it was a terrible entry. It was like right here at the top. But if you would like to get in now, I think we should see something coming up like this, if I were to guess. And we might chop around in here, but either way, something like that with the 100-day. Overall, I think things are looking good through the holiday season. Okay, Apple. Okay, so I think the last one is CHWY, which is the one I doubled down on today. So why did I double down on this one? First of all, it's insanely oversold. We're finding support here again at the 65 strike, and that's where it about found support here last time. Then it had a good run after that. So it's very possible. This looks similar to this. Earnings was bad, again, which is when I entered in up here. I need to get it the whole way to 80. I haven't been able to roll that down much, if at all. Let me check my history. 85. Okay, so I started off with the 85 strike somewhere up in here, right before earnings. Should have been safe. Blew right through it, and now I'm down to here. So I'm right at the 100-day. Obviously, 20-day and 100-day is going to act as resistance. So I probably will have to roll this out. It's December. I got plenty of time on that. So yeah, I'm going to guess chop around up here. Then we get over the 20-day, then chop around up here, and then go up. But that should still all happen before my expiration. Let's do a vertical line here, somewhere in there. And let's draw the 20-day. At that point, it would come up right there. Okay, so that's something that I could see happening. Obviously, we'll see how it plays out. But I tend to be pretty accurate most of the time. Okay, so that was my portfolio. I guess I didn't really explain the reasons. I doubled down because it's found support here. It's very oversold. MACD looks like it could be turning up. It was technically my lowest position here. I think it was something like 30% or something like that before I had doubled down. The original credit I collected was 196. I had gotten it up to like 200 or something like that. 250 before I added another contract, but the contract I added today was for 15.2. So just that huge difference between my initial credit of, we'll say 250 and 1500 brings my break even so much better than what it was. I can have the stock be at 70 or above. I don't actually look at that. What I'm actually looking at is the break-even price on the contract, which is 902 now compared to 250, and it's currently at 16.5. So yeah, I've got about $700 there so I can break even on that and get out for a wash. Okay, so let me think. I don't think there's anything else here I need to cover. If you have any questions, let me know, but otherwise I'll leave it there. Thanks, guys.